So I've studied the successful guys on our options trading desk here at SMB Capital over the years, and when I look at the most successful traders on the options desk that I manage, there are certain skills and character traits that are present in every single one of them. Since I'm contacted so often by traders who'd like us to hire them and allocate capital to their trading styles, I thought it might be helpful if I shared with you today the 10 consistent characteristics of the most successful traders that I manage. This could be important for you as you think about what you might want to personally work on to qualify as a proprietary trader or simply to get better at trading your own capital. So stick around, it's important. Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's Options Trading Desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. Now, you're going to want to click our subscribe button right now so that you don't miss any of our free trading videos produced for the trading and investment community. So, like anything else in life, putting an options trading desk together is a trial and error process, and when we look back on it recently, we realized that there were certain common traits that characterized the most successful traders on our trading desk. I thought it was important to share these with you today because some of you may be contemplating becoming professional traders, so it's important for you to do an honest self-examination so that you can determine if you've got what it takes to become a professional trader. And if you don't, what steps you'll need to take to become an attractive candidate to a proprietary trading firm that might consider entrusting you with their capital. So that's what I'm hoping you'll get out of this video, a checklist of things to work on to set yourself up for success as a successful professional options trader. And if you complete the full video today, at the end of this video, I'm going to make a unique suggestion that I think you can really very personally benefit from, and it's free, so it's going to be worth it for you to stick around for the whole video. Now, before we jump into our 10 key observations about successful professional options traders and what it takes to become one, I wanted to mention that we're currently running a 2-hour free intensive workshop at the moment where we'll be teaching you 3 real-world option strategies that our traders use, including a really simple but incredibly effective strategy that some of the greatest investors in the world like Warren Buffett use all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with the stock that you like where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage. So if that would be of interest to you, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. Or you can just head on over to optionsclass.com to register for this free intensive workshop. It's a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. All right, so we're going to jump in now and take a look at the 10 characteristics that we identified in our successful traders on our options trading desk. And the very first one is you've got to have a solid theoretical training in options trading. You just can't get around that in any field, and certainly in options trading. Equity pricing is very straightforward. If the stock goes up and you're long that stock, you make money. If the stock goes down and you're long the stock, you lose money. That's fairly straightforward. I'm not saying day trading or swing trading equities is easy. I'm saying that it is not hard to understand the basic pricing dynamics. But with options trading, it's not intuitive. Let me give you an example. Suppose you bought a 120 call on a stock that was trading at 100. And that stock went to 115 3 days before expiration. There's a very good likelihood the call you bought has gone down. Why? Because you're running out. Time is running out. And so you bought a call. Stock could have gone down. It could have gone nowhere. It even went up 15 points, and you still lost money on the call. So that would be very frustrating for a trader who is used to making directional calls gets those calls correct and still loses money on the trade. And that's because there are multiple moving parts in options trading. There's time, there's volatility, and there's price. All three of those affect the options price, yet you have to have an educational understanding and a proper intellectual framework to understand how each of those affects the price of the options. That's different than equity trading, and so you have to get a solid educational background in order to become a successful trader. You've got to have that proper framework to survive and to thrive as an options trader. The second thing we noticed is everyone on our trading desk has at one time or another worked with a mentor to improve. You can't learn anything in life just by reading a book. Think about it. Any of you who are golfers out there, and I am the worst golfer in the world, but those of you who are golfers would know that unless you take lessons, you're not going to be successful. If you've simply read a book on how to golf and haven't gone to a driving range, you're not going to be successful, are you? You've got to practice and you've got to work with a mentor or a coach in order to become successful, and that's true of every successful trader on our desk. Studies have shown that working with successful mentors is highly predictive of success in the future for traders, so it's important. And most of the traders on our desk, by the way, have been mentored by us. And that makes sense because we get to understand a trader's emotional stability, their discipline, their skill level, their technical understanding, their intellectual framework of options trading. And so it's very, very important to work with a mentor to be successful as a trader long term. The third characteristic of a successful trader on an options trading desk, I have to tell you, is a little bit of tough love. And that is, you didn't just start trading last week. Why do I say this? There are many traders who approach us who just had 4 good trades in a row, and they think that qualifies them to become a proprietary trader. Well, it takes a little more than that. It takes a lot more experience than that. Now, this lack of experience takes many forms. For example, there are people, I know this is going to be hard to believe, but there are people who have only back-tested option strategies, have never actually traded live, and will apply to us for a trading position. They think that's reasonable because, and there's some logic to it, if it works out theoretically using live historical data, why wouldn't it work out in reality? And the answer is there's a lot of reasons it might not work in reality. The major one being, are you as a trader able to follow your own discipline? I know that sounds preposterous, but that's actually the major reason traders fail. They simply don't follow the disciplines that they themselves developed in most cases. So if you've only back tested and you've never traded live, you're not ready yet because you don't know how you're going to react to the market when you're actually trading live. I knew of a trader once who used to make presentations to a group of traders that would meet online once a week. And we were all amazed at the various strategies that he was developing. 2 years into this group, we realized the guy had never actually traded live. Everything was backtest. It wasn't that he was hiding that from us. It's just that it never occurred to him that there may not be legitimacy to his strategies if he doesn't actually get out there and trade them live. So backtesting alone is not enough. At the same time, you also can't only have live traded for a reasonably short period of time. Why? Because if you've traded, let's say, over a 3 to 6 month period and you've been successful, that doesn't mean you've been exposed to every market situation that can occur. You've only been exposed to a very small sliver of potential market situations. So if you've only live traded and not back tested your strategy 5 or more years, then you are not going to be successful. And so It takes time, a mixture of live trading and backtesting in order to be a successful trader long term. There's not a single trader I know on our trading desk or any other successful trader I've ever met who doesn't do a mixture of live trading for an extended period of time combined with backtesting further so that you are validating your strategy farther back in time than the experiences that you've had. You've got to be able to trade your strategy through rough markets, which will test your strategy. And you may even lose money on your strategy in those markets. But if the strategy on an annual return basis holds up through a difficult series of market environments, then you may have something, and you may have a strategy that prop trading firms are going to want to back. So let me give you a really good example of this. When I first started trading options, I had a trading partner. We worked in the same office together, and I had been trading a certain strategy for 4 months in a row. And after the fourth successful month, I walked into his office and I said, "This is like stealing candy from a baby. This strategy is so easy to make money on." Don't ever say anything like that. The minute you say that, there's something called the options gods, and they will strike you down when you make a statement like that. And in fact, I got murdered the next month on that strategy. There is no such thing as stealing candy from a baby in the markets. They're real smart out there. You can't steal from them, okay? You've got to understand that options trading is a statistical game, and you're going to win some months and you're going to lose other months, and you are not going to be able to get around that reality of trading. I had a mentoring student once who referred to a certain strategy that he had traded successfully for maybe 2 months in a row. He called it an ATM machine. I told him, "You may never, ever speak those words out loud again, lest you anger the options gods. You can't think like that. There are going to be problems at using any individual option strategy. There are going to be difficulties. So you've got to be aware of that, and you can't be cocky." Let's take a look, for example, at 2013. The year 2013, if you were trading a bullish option strategy, you probably would have made money almost every month. And you'd feel like you were a genius and people should give you $100 million to trade. All right? How about that same strategy in 2018 when in both February and the final quarter of 2018 were basically extremely bearish markets? All right? That wouldn't have worked out for you very well in 2018. But if you only experienced 2013 and you didn't backtest into, for example, the financial crisis in 2008, you never would have known how bad that strategy could have gotten in the wrong environment. And so you've got to have a well-rounded trading experience in order to be a successful proprietary trader at a later point in your career. The fourth thing we've noticed about successful options traders is that they have a bread and butter strategy. Now, what do I mean by a bread and butter strategy? A bread and butter strategy is the strategy that you rely on in your trading each month. So, and this may take time, by the way, for you to find. We had a trader on our desk who it took about 2 years for him to finally find his bread and butter strategy. And once he was able to find it, he was able to be very successful for a sustained period of time because he had developed his bread and butter strategy. It's his core strategy. And what are the characteristics of a bread and butter strategy? Number one, it's taken a while to find it. Number two, when you find it, every month when you put that trade on, and most options income strategies are monthly strategies, every month when you put that trade on, you feel like you're going to win. You feel like, I know how to trade this, and I'm going to win this one. Now, every great golfer also thinks every putt he's making is going to get in the hole. They don't all obviously do that. But if you have that sense of confidence and that visualization, that's going to help you succeed. Your bread and butter strategy is one where you've experienced so much success in so many different kinds of market environments, and you've seen it work, then you have found most likely your bread and butter strategy. And therefore you have tremendous confidence that you're going to make money on that strategy every month when you put that on. If you have that feeling about your strategy, you may have something. You may have a bread and butter strategy. And finally, you've got to know that this strategy is going to hold up through multiple market environments. All right, multiple market environments. If it doesn't, it's not really going to be a very good strategy. You want one that in the toughest environment for that strategy will make some money, and in the best environment, of course, will make really good money. And so you've traded this strategy through multiple markets, and you've gained confidence because you've seen that it handled those multiple markets well. The fifth characteristic that we've noted of traders who are successful are that they're not trading an account that's too small or an account that's too large on a personal basis. Most traders come to us having an account that they've established with an online broker, and they are personally trading before they approach us. That's pretty much a requirement in order to be a trader on our trading desk. Now, if you have a $1,000 account, that's too small. A $2 million account might be too large. We'll have to see. It's an adjustment period. Now, why am I saying there's both a minimum and a maximum? Let's talk about it. It's probably a surprise to you, but I want you to understand our reasoning. If you're trading a $1,000 account and you have a 10% loss on your strategy, which would be a common maximum loss, a common stop on an options income strategy, 10% loss, you've lost $100. The minimum capital that we typically will give to a trader on our trading desk is $100,000. So that $100 loss translated to a $100,000 account becomes a $10,000 loss. Okay? Most traders can't handle the idea of losing $10,000, even if it's the prop firm's money. The concept of having logged a loss that big compared to what they were used to, a $100 loss, they just freak out. And once they freak out, they stop trading in a normal way. So if you were down $90 on your $1,000 account trade, that trade may very well come back and make $80 for you. But if you're down $9,000 and you're panicking, you may not do the same things you did on the smaller trade that would have gotten you what ultimately would have become an $8,000 win. All right? Because you're freaking out at the size of the dollars involved. So that doesn't typically work. What you need to do in that case is slowly increase your capital size on your trading, and as you continue to be successful, because risk tolerance is a muscle. It's a muscle that must be built. If you're used to lifting 100 pounds and then you lift 1,000 pounds, you're going to break your body, all right? But if you are used to lifting 100 pounds and then you lift 125 pounds, that's a more reasonable transition. Same thing with trading styles. If you start out with too small of an account, then it's going to be difficult for us to give you the capital you'll need in order to be successful, and at the same time be able to handle it emotionally. So now let's go to the other side of the spectrum. Let's talk about the high rollers. All right, the high rollers. These are guys who have, say, a $2 million account, and they're used to having daily P&L swings, maybe six figures, right? Okay. Those guys, we're not going to start them out with $2 million of capital typically on our options trading desk. So if we give them maybe even $200,000 of capital to work with, well, all of a sudden, the daily swings become in the thousands instead of maybe the hundreds of $1,000s. You know what happens? Those people get bored. Those losses to them are not meaningful compared to the accounts that they have traded. So as a result, those are not necessarily successful situations in terms of options traders. So We kind of like that kind of happy medium where you're trading at least, say, a $25,000 personal account, so that if we give you $100,000, you'll be generally used to the kinds of drawdowns that you'll experience during the course of a trade, and you won't panic. But if you're trading $2 million and you're coming to us for capital, that may not be a successful situation, because we'd be concerned about you're basically getting bored. And so, believe it or not, those are real, meaningful criterion that we have gleaned from studying the traders that have been successful on our trading desk. The next thing, and you're probably surprised it's taken me to item 6 to get this, is you actually make money. You have sufficient returns. What we look for, generally speaking, is a 24 to 36 month period where you've traded with gains above 30%. We may have a little bit of flexibility in that, but that's what we are generally looking for. We also want to see your back test, because 3 years, believe it or not, is not enough to tell us whether this strategy is going to hold up long term. We like to see at least a 5-year combination of back testing and live trading on your strategy to show us that you are going to be successful, not just over a short period of time, but over the long haul. The next thing we're going to look at is, how did your results compare to our trading desk during those same periods of time? If your results were much better, or a little better, or around the same, that's encouraging. If your results, while the rest of us were doing well, was not so good, that's not so encouraging. And so that is, you call that almost marking on a curve. We'd look to see, how did you do in the years when everybody had a pretty easy time of it. That's going to matter to us in terms of predicting success for you in the future. And finally, we're going to ask to study from your back tests, from your live trading, exactly what you have done in rough markets. How has your strategy worked in difficult market environments? And that's because if your strategy is truly a successful strategy, it is going to succeed in multiple kinds of markets. Now, the 7th characteristic that we have noted with traders who are successful on our options trading desk are folks who have live traded their strategies through some kind of a rough market. Why? Because if they can handle emotionally trading through a market that's not particularly positive for their trading style, then that tells us they have the character necessary to succeed long term, because rough markets are going to occur. We want to see not only that you've traded during some kind of a rough market, but also that your back test incorporates really tough markets. We have a strategy we're trading on our desk right now, which actually had its best month during the Great Recession month of October 2008. That horrible, horrible month. If those of you who will recall that, how much value the market was shedding every day was unbelievable. Volatility in options were going through the roof, and those were very difficult times. It'd be interesting to see how your strategy would have performed in an environment like that, which could well occur again. There was also a flash crash in May of 2010. How would your strategy have done then? How about August through December of 2011, when there was a sovereign debt crisis in Europe, combined with the fact that S&P had downgraded U.S. debt? That was a rough time in the market. That was a 5-month rough period. How about August 2015, when there was a crash in the market in the middle of August, when everyone was on the beach? There was a crash due to a Chinese currency crisis. How did your strategy do then? How about November and December 2016, right after the election, what you'd call the Trump rally? How did you do then? And finally, in February 2018, there was something we call the volatility apocalypse. That's when options volatility exploded in the middle of certain tough strategies. How did your strategy do then? And then, of course, there was the fourth quarter of 2018, in which basically there was a 3-month correction that almost by inches almost became a correction. All right, how did your strategies do during those periods? Was your strategy holding up on an annualized return basis through those various markets? Now, the eighth characteristic that we have noticed in traders who are successful on our trading desk is they're not just lucky people, all right? There are lots and lots of ways that you can seem to be successful as an options trader short term and then turn out to be disastrous long term. There are strategies called naked straddles and naked strangles. Now, I know that sounds a little strange. Those are, in fact, the names of those strategies. We're not going to get into what those are right now, but if your strategy is based on naked strangles and straddles, that is got a lot of danger in it and may succeed short term, but will not succeed long term in most cases. If you do weekly strategies, you can go through a long run of success on weekly strategies and then kaboom, something happens that is adverse to that strategy and you may lose everything that you gained prior to that using a weekly strategy. So that may not be a successful trader on an options trading desk, someone who trades just weekly strategies. It's possible they could be successful, but it is less likely, we have found in our experiences. There are traders who just got lucky on some long shot trades. For example, suppose the market had sold off a lot and just at the bottom you bought some cheap calls, all right? And then the market rallied and that happened to you once. That doesn't mean you are a successful trader. It means you timed that one trade right. That trade could have gone against you, but you timed that one correctly and you got it right. You may be the kind of person who can do that on a consistent basis, then maybe you will be successful. But if you just got lucky a couple times and you had a lucky number of big hits, it doesn't mean that that can be replicated over time. A very good story, or what I call the secret sauce story. It's a nickname we had for one of the guys around here. Won't get into that, but there was a trader that I'm very familiar with who traded for a fund, and what this fund did was they sold way out of the money puts. Well, 9 times out of the 10, a way out of the money put is going to just expire worthless and you'll make money on it. But that one time, and you only need one of those times, can be extremely, extremely painful. And his firm, after having traded this way for a long period of time, suddenly, out of nowhere, went bankrupt. And that is because they were trading an unprotected strategy that had a very high win rate, but an absolutely catastrophic downside if you understood how that strategy worked. So because you are doing something very unsafe and getting away with it, in other words, doesn't mean that you will be a successful proprietary trader. In fact, we think it is an indicator that you will not be successful. The ninth characteristic that we have found to be a predictor of success on our trading desk is that you are simply a good team player. And what do we find in our team players on our desk? Number one, they have a passion for the markets. They love reading blogs about the financial markets. They are well read, they are well educated, and they're into it. When they wake up on Monday morning, it's fun for them. It's not a chore for them. It's something that they look forward to. They have a passion for the markets. Secondly, you are a hard worker. There's no way around that. In any path you want to take in your life, if you do not work hard for success, you are not going to be successful. And the folks on our desk are all disciplined, hardworking people who do the back testing, do the experimentation, do the trading they need in order to become successful and to improve. All of the guys on our trading desk are people who have a passion for learning and growing. They're constantly coming up with new ideas that they're proposing to trade, different strategies that they are experimenting with that they would like to take live. These are people who have a passion for learning and growing and expanding their knowledge base as a trader. And finally, you're not a jerk. You are a person willing to share your ideas with other people. You are a person willing to listen to advice from a mentor or a manager and not be cocky and boastful, because the cocky and boastful traders never make it. They're most likely cocky and boastful because the markets haven't really tested them. They become a lot less cocky and boastful the day they take a major drawdown. So you've got to be a good team member to be a successful proprietary trader. And finally, you are a mature trader. Now let me tell you what I mean by a mature trader, because I left this for last for a reason, because it does such a good a job of summarizing the character traits that are necessary to be successful. Number one, you know how to lose. That is the biggest weakness for many traders. They simply don't know how to lose. They can't accept that they're wrong on a trade. They can't accept that their trade is not going to come back. If they don't take their stop, they won't survive as a trader. You can't afford to think you can never lose. At SMB, if you don't take your stop, you're not going to work here for long. That's just the reality of our trading desk. You've got to take your stops no matter how much you think your trade is going to come back. We can't afford for you to be wrong. So you've got to be able to lose and understand when you've lost a trade and take your stop. Secondly, and this is essentially the opposite point, you're not too greedy. Let's say you have an options trading style that has a 10% target profit. 10% of your capital would represent your profit level on that trade. Now let's say you're up 9% on that trade, and the next day Britain votes on Brexit. Okay? If you're up 9% on your trade and your target is 10%, you better take that trade off, because the next day all hell's going to break loose either way in the market. All right? And these kinds of strategies are best in calm markets, not radically, wildly moving markets. So therefore, you need to take that trade-off at 9%. The mature trader understands he can't be greedy, try to squeeze that 10th percent out of the trade when something obviously very large and disruptive to that trade is going to happen the next day. A positive trader also, or a successful trader also knows when not to take profits, all right? When not to take profits. If you've been down 2% on a trade and you're up 0.5% a couple days later, and your strategy calls for you to make 10% as your profit target, just because you've been down for a while and now you're up, an immature trader just pulls that trade off. A mature trader will say, all right, trade's starting to work. Now we're going to let it continue to work, and we're going to let it breathe, and we're going to let the trade become successful. Mature traders know how to not pull trades off too early. You're a responsible trader. That's part of maturity. You prepare for the market day. All of our traders know an hour before the market opens what is going on with futures. If we're having a big sell-off overnight for some reason, some tweet, something happened, and the market's freaking out, you got to know that, and you can't know that 1 minute before the market's open. 8:30 a.m. Eastern Time every day, I know exactly where the futures are, and I am beginning to develop my pre-market plan. That's an upside plan and a downside plan for what's going to happen in the market, and I'm going to, in many cases, set up my complex order tickets with my options platform in order to make sure that I can respond in a timely fashion to things I need to do on the trades. I have an economic calendar. I'm aware of when the non-farm payrolls is going to be announced, when there's an FOMC meeting, when FOMC minutes are going to be released, when major speakers in the financial world are going to speak. I'm going to be aware of those things, and I'm going to trade accordingly. I'll have a disaster recovery plan. I was one day trading at Starbucks in the middle of a snowstorm in Philadelphia, where I live. Why? Because the power went out in my building. I had to drive over. I knew where the Starbucks was. I had a plan. I knew exactly what I needed to trade from Starbucks, and there I am with the Wi-Fi trading at Starbucks. Why? Because I had a disaster recovery plan and I planned ahead. Finally, occasionally you won't be in the office, but you'll have live trades on. You got to deal with that. You either have to know how to put contingent orders in with your broker, or you have to have what we call trading buddies on our trading desk. Every person on our trading desk has another trader who will jump in when they are not available and monitor their trade should anything untoward happen. You've got to have this kind of maturity as a trader to be successful on a proprietary trading desk. In summary, the successful traders are the ones who focus on risk management. Options income trades have a high win rate. We say typically they will win 9 out of 12 months in a year. So winning is the easy part on these trades, believe it or not. The hard part is controlling the losses in the losing months. The traders who are successful know how to control their losses. It's not fun to take a loss, but they're mature individuals and therefore they know how to take a loss, and they know that in the long term their returns are going to be great if they take their losses on time. What if I failed this test? If you were sitting there taking notes, asking yourself, do I fit into these categories or not? You probably had one, at least, that you were not qualifying for, all right? This is what the perfect candidate looks like, but nobody's perfect. There is no perfect trader out there. There's no perfect person out there. The question is, have you gotten no's on a lot of the answers? Do you have a preponderance of no answers? That could be problematic. If you flunked most of these questions, you're probably not ready to be a prop trader quite yet. But these 10 self-analysis questions could be predictive of whether you'll be successful or not. We have found that, in fact, they are. So what do you do if you flunk this test? Do you just give up? No. Anyone who has any kind of a determination in their life is not going to just give up. It may be that you have to take certain steps. You may need to get a deeper education. If you're a dabbler, you're going to lose. You've got to get a serious education in options trading. Maybe your education has not been as solid as it should be. You may need to get an options trading mentor, all right? That may be the thing you need to get you over the hump of certain technical and psychological reasons that you're not succeeding. A good idea is to join an options trading community. There are a number of them, and that way you can mix with other options traders. You should chat with other options traders. For example, in our options tribe that we have here at SMB, we have a Skype chat, and our traders chat during the day and share ideas. That is a way to get to know the way professional top flight options traders think. You need to find your bread and butter trade. That's another suggestion I have for you, which is if you are trading a wide variety of strategies, you may become a jack of all trades, a master of none. You've got to learn how to become a trader focused on a couple strategies that really, really work for you very well on a consistent basis. So you may need to find your bread and butter trade. That may be the missing link for you. You haven't quite found that yet. And as a very practical issue, you got to keep careful records. No one is going to talk to you. No one is going to talk to you at a prop trading firm if you can't prove your assertions as a trader. So you got to keep careful records, particularly of your bread and butter strategy. So there are ways of overcoming every deficiency you may have to qualify as a proprietary trader, but you've got to put the work in. Remember, the famous Chinese philosopher Lao Tzu said, a journey of 1,000 miles begins with a single step. So even if you are very far away from having the characteristics we talked about today as a successful options trader, nonetheless, you can begin to take the steps necessary. Now, just to remind you, as I said earlier, if you enjoyed this video and would like to learn 3 real-world option strategies that professional options traders use all the time, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That's going to open the free registration page in a new window so you won't lose this video, don't worry. Or you can just head on over to optionsclass.com to register for this free intensive workshop. It really is an unusual opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. Okay, so as promised, here's what I'm going to offer you. I'd like you to comment below as to which of the points I brought up in this video immediately struck you as a trait that you definitely don't have and you feel you need to work on. I'll go through every single comment made and I will make a suggestion for you personally on a solid next step for you to work on that issue if you take the time to comment below. So please do it, it can only help.